Welcome to Pip Insight. Thursday the 2nd of July, Asian pre-open. This session we have analyzed 8 Forex pairs and selected the 7 with the clearest technical picture for showing bullish structure and 3 showing bearish structure. Every chart shows support and resistance zones and moving average alignment so you can see the technical picture at a glance. Let's get into it. Here is today's Asian pre-open chart analysis. Pairs showing bullish structure: gold dollar, euro dollar, pound dollar, Kiwi dollar. Pairs showing bearish structure: dollar yen, dollar Swiss, dollar Canada. Full chart breakdown for each pair coming up now. Remember, this is educational content only, not financial advice. If you've been waiting for the gold breakdown, here it is. Heading into the Asian pre-open, gold is sitting at $4,136 after a session that told a pretty clear story. We had a powerful breakout candle earlier in the day. Price surged from around $4,077 all the way up to $4,157, but that spike wasn't sustained. What followed was actually constructive: a measured pullback, a brief shakeout to $4,118, and then a recovery close back near $4,136. That's not weakness, that's digestion. The broader structure remains bullish on both the 4-hour and hourly timeframes. The EMA 20 and EMA 50 are both well below current price and pointing upward. MACD is showing a strong positive histogram with a fresh bullish crossover, and RSI at 64 gives us room to move higher without immediately screaming overboard. Now, the fundamental picture is where it gets interesting, because today brings the US jobs report. Non-farm payrolls are forecast at 114,000, a significant step down from the previous 172,000. A soft number typically weighs on the dollar and supports gold. A surprise beat could flip that dynamic quickly. Wage growth and the unemployment rate round out that 8:30 cluster, all three releasing simultaneously means potential for sharp volatility. The levels to keep on your radar: $4,113 to $4,120 as the support zone to hold, and $4,150 to $4,160 as the resistance zone bulls need to clear. Euro dollar. The chart is showing bullish structure on this session. The 4-hour trend is to the upside. Resistance is marked between 1.1 for 5.4 and 1.1 for 7.5. Support is marked between 1.1 for 0.7 and 1.1 for 2.1. Here is the full chart breakdown. Pound dollar. The chart is showing bullish structure on this session. The 4-hour trend is to the upside and the 1-hour is also pointing higher. Resistance is marked between 1.3375 and 1.33855. Support is marked between 1.331 and 1.3327. Here is the full chart breakdown.
Dollar yen. The chart is showing clearly defined bearish structure on this session. The 4-hour trend is to the downside and the 1-hour is also pointing lower. Resistance is marked between 161.5 and 162.4. Support is marked between 160.4 and 160.76. Here is the full chart breakdown.
Dollar Swiss. The chart is showing clearly defined bearish structure on this session. The 4-hour trend is to the downside and the 1-hour is also pointing lower. Resistance is marked between 0.804 and 0.808. Support is marked between 0.797 and 0.80094. Here is the full chart breakdown. Kiwi dollar. The chart is showing bullish structure on this session. The 4-hour trend is to the upside and the 1-hour is also pointing higher. Resistance is marked between 0.5712 and 0.57176. Support is marked between 0.56709 and 0.5676. Here is the full chart breakdown. Dollar Canada. The chart is showing bearish structure on this session. The 4-hour trend is to the downside and the 1-hour is also pointing lower. Resistance is marked between 1.419 and 1.4219. Support is marked between 1.4145 and 1.417. Here is the full chart breakdown. That is the Asian pre-open analysis from Pip Insight. We covered 8 pairs this session, bringing you the ones with the clearest chart structure. All content is educational only and is not financial advice. If you found this useful, please like and subscribe. We publish 3 times every weekday: London, New York, and the Asian session. Follow us on X at Forex Insight for updates. See you next time.